We're a lot closer to recession today than we are a year ago. And the market is certainly pricing in a recession 12 to 18 months out. We saw the inversion of the yield curve. But the more likely scenario is that we continue this lower and slower growth for longer. So we're likely to continue to decelerate without actually dipping into recession, but that's without any type of external risk that could happen. And that is where we're seeing significantly more uptick, whether it's what's going on in the Middle East, oil spikes, where we're seeing a continued trade tension, or a miscommunication by the Fed. The market keeps wanting more. If they underperform, if they underrepresent, will they reduce low?
Let me ask the same question to David Spika, and then I'm going to come to you. David, what do you think? A possibility, remote, larger, better than 50% that there's a recession next year?
You know, as far as the market's concerned, Tyler, I don't think it matters. I don't think it matters at all because we've clearly got a declining growth in the economy, declining growth in earnings, and I don't think there's any reason for stocks to continue to go up in this environment. So whether we have a slow growth environment or a recession, stocks really don't have a reason to go higher, and a Fed rate cut right now really doesn't change that fact.
So, Tillman, you touch a lot of consumers every single day in this country. You run a lot of different businesses. You understand the credit markets. When we asked you in a pre-interview whether there was likely to be a recession in 2020, your answer was not definitely. Now, that's different than saying definitely not.
You know, obviously, we're in a slow growth environment right now, but there's not that catalyst to create a recession. Unemployment is at an all-time low. Okay, the leverage markets are still very, very good, and there's not going to be the defaults because you don't have any covenants on the debt. And so unless there's a maturity and you're in a recession, there is going to be no problem in refinancing. So you have to have a catalyst. Everybody got all paranoid over the weekend about the Saudi Arabia explosions, and I said, they're going to be up and running in a few weeks. They've already said that. They're not going to lie to us. And here they say it today, and oil's gone back the other way. There's not a catalyst. Could we have a slowdown? Absolutely. I don't see a recession at all next year.
I guess a lot of these guys are talking about tactical positionings in the market, right? I mean, that's where you say, okay, well, we know things got a little crowded on the defensive side over the past month or so. Mike, did we kind of corrected for that now? I mean, I think you just have to watch, are people piling too far one way or the other?
You know, I think people have not realized that we're just coming off to 1 year since we hit the September 2018 highs. The market's moved about 3 or 4% since then. Utilities and real estate up 20% during that same period of time. And what started to happen is people want exposure to equities, but they don't have nowhere else to turn. But again, the economy's starting to slow and they're feeling more insecure. But what has to stop is defensive exposure or what's working at any price. And that's what we saw reverse last week. We saw it in signs with the WeWork shelving its IPO. Yep. The idea that all of a sudden price matters again in investing. And that's going to be a welcome relation to particularly those value investors in the market.
It should always matter for investing. I mean, that's a fundamental. So do you have a point of view, Tillman, on the Fed and this decision tomorrow? I mean, they've cut rates once. They're saying they're going to cut them again. Does that make sense to you? Is it going to change the way that, you're operating your businesses at all?
Not yet, but I really want to make this point. And you're talking to a professional borrower here, okay? And I believe that you should not lower tomorrow because if we do have any kind of a dip, you've lost your bullets, okay? And we don't have a problem now. But if you keep lowering rates and then we have an issue and you don't have any ammunition, that's when our country can really get in trouble because you don't have any way to fix it.
Right.
And somebody who loves to see rates always going lower, I don't know that this is the time.
Is the Fed being bullied into doing this, either by the markets or by somebody who lives
the other borrower,
by another guy who knows about borrowing?
Another professional borrower.
Professional borrower.
It could be. We don't know what's really going on, but there definitely is some friction between the Fed and the White House. So we don't.
Oh, you can say that again. Yeah, that puts it mildly.
Yeah.